All right, so today we are going to be breaking down this extremely useful tool. And if you are not using it, then you are simply just missing out because the market only has one objective: to facilitate as many transactions as possible. And as a result, this is where you get your balanced states of delivery and imbalanced states of delivery. And the easiest way to determine whether we are facilitating transactions or whether the market is in one-sided delivery is with the volume profile. The volume profile determines how much volume was facilitated at each individual level. If there is more volume, we are balanced. If there is less volume, we are imbalanced. So make sure you watch till the very end. And this is your beloved volume profile. So for those who are unfamiliar with what a volume profile looks like, this is exactly it right here. The longer the bar, right, each bar represents how many transactions were facilitated at each individual level, and this is dependent on your ticks per row. So right now, my ticks per row is 50 ticks, so 50 divided by 4 is 12.5. Each bar represents 12.5 points, right? If you want to, reduce it to 25, you obviously get more bars, but let's for now keep it at 50. So basically, the rule of thumb with the ticks per row is the higher the ticks, the more, general the level is going to be. You're going to get like a broader level, a broader information regarding each individual bar or each individual level. If you want to reduce your ticks, the levels are going to be more specific. You're going to get a more specific information regarding how much volume was transacted at each of these individual levels, right? But for now, let's keep it at 50. So this is the volume profile. There are multiple components you need to understand regarding the volume profile, but in a nutshell, the longer the bar, the more volume was facilitated, right? The more transactions were facilitated at each individual level. And this represents a balanced auction. The smaller the bars, as you would have guessed, the less volume was facilitated, the less transactions facilitated at these levels. So when you have these type of bars, this is where the market is most balanced, especially when you have this single blue bar over here, which represents my volume point of control. This is the single level where the most volume was facilitated, and it's a single level within this market profile. So I have this set to the daily profile. Within the daily market profile, specifically the volume profile, this was the single level where the most volume was facilitated. So both buyers and sellers were most satisfied at this level. And of course, when you have this, where there was very little volume, right? The bars are tiny, the bars are small in comparison to these large bars over here. This is where the market is inefficient. It's inefficient because very little two-sided price delivery was offered around here. The auction wasn't balanced like you get with these larger bars. Usually with low volume nodes, was where one-sided took control. This was where one-sided delivery took place. So if you are, for example, in a bearish narrative and you have a low volume node over here, which is what they're called, right? This is where aggressive sellers pretty much dominated these price ranges and took price lower. So, that is what you get with these smaller bars in comparison to these larger bars over here. And they do have a name for it. This is your high volume node and this is your low volume node. Super simple. That's what it is. When you're looking at this red shaded area, this is the value area. So from the value area low to the value area high, depending on what your setting is, usually it's going to be either 68% to 70%. I would recommend putting your, settings around those levels. Anything above or anything below kind of defeats the purpose. But this represents 70% of total transactions that were facilitated within the market profile. So you have your high volume node, you have a balanced range with the high volume nodes. And if you want to get a general range of where the market was the most balanced, which represents 70% of total transactions, this is your value area. A good rule of thumb for identifying, the narrative, identifying easy market structure is where is value currently being built. If value area is consistently shifting lower, so you can see here, like these value areas are consistently shifting lower, shifting lower, shifting lower, that means both buyers and sellers were satisfied with lower prices and they continue to get satisfied with lower prices. Otherwise, they wouldn't be building volume at lower prices. Remember, the more volume that was built at a specific level, the more balanced that level was, the more the market offered fair value. That is the most optimal range for the market to facilitate anything in, right? That is where the market is able to facilitate as many transactions as possible. So always follow the value area when you are looking to determine your narrative. But now that brings me on to, these two characteristics with the high volume and the low volume node. As you would have guessed, the high volume node, you have this range over here being the high volume node. inside of our value area. But let's use the value area, right? Let's just use the value area. This is where you're going to get two-sided price delivery. So what can you expect from two-sided price delivery? This is where you get slower plays. You're going to get consolidated price action. Why are we getting consolidated price action? Because the market is fair here. The market is offering fair value. Both buyers and sellers were satisfied at this level. So there's no clear one-sided delivery here. There wasn't, there's no inefficient pricing. These prices are efficient. The market is able to facilitate as many transactions as possible. So you get two-sided price delivery here. However, your low volume nodes, on the other hand, this is where you get extremely fast movements. Not extremely, but you're going to get faster movements, either in the form of a rejection or a fast breakout to the upside or fast break to the downside. The reason being is because these levels, when the market comes back to it, it's to fill in this inefficiency. It's to offer two-sided price delivery and determine whoever was in control here, whether they are still in control or not. So, going back to, let's say, this clear example over here, you're in a bearish downtrend and you have a low volume node that gets printed in support of that bearish downtrend. A lot of times, the market is going to retrace and fill in these inefficiencies and have a fast rejection lower to determine whether sellers are still able to hold this control again. Because, in this narrative, aggressive sellers took control, one-sided delivery, and that's where you get that fast movement lower in the form of low volume nodes. Very little transactions were facilitated here. So that could come in the form of rejections. However, if they come back, right, because remember, the whole point of retracing or retesting these levels is to test for two-sided auction and to determine if, the original participants are still in control. If we come back and we're testing for two-sided delivery, but the aggressive sellers or sellers in general are unable to hold this level, you're going to get a fast movement higher. So low volume nodes, they act not only as rejection or reaction zones, right, key levels, they also act as good targets, right? If you was to enter into a long here, for example, let's say you enter somewhere here, your target could be the low volume node, because that is going to be the next level where you had one-sided delivery in the past. So the participants that offered these one-sided delivery could step in again. Right? If they don't, then you get that fast movement higher. If they do, then you get a fast rejection lower. So low volume node, you're going to get fast movement. High volume nodes, you're going to get two-sided price delivery. Right? So there's multiple ways you could frame your volume profile or how you could draw your volume profile. The most obvious way is drawing it or setting it based on the daily profile. This is a daily profile. So depending on whether you're trading regular trading hours or you have UTC on, right, is going to give you the daily profile from that specific time range. So you could use this for your narrative and you could also use this for your key levels. Like, as you can see over here, this is the UTC daily time frame. So it represents from market open to market closure, including electronic trading hours or extended trading hours, not just regular trading hours. But you can see from the volume profile, this is how you can start to frame that narrative. And this is how you could really identify where the market is currently heading. Because the value area tells you everything. Price action doesn't really tell you much. When you're looking at price action, for example, you have an uptrend, you can't see where the most volume is being facilitated because every single candle just looks the same. It shows the same open, high, low, close, or open, low, high, close, candle closures. So it doesn't give you much info. With the volume profile, it clearly tells you where within those candles or where within those specific price action was facilitated with the most transactions. So this is one way of determining a narrative and one way you could use the volume profile. You're looking at the value area, whether we could displace below the value area or go above the value area high. And that would determine your narrative going into the next day or the next session. If you're looking at it from an overall narrative, you're identifying low volume nodes and you're identifying high volume nodes. Let me give you an example. This is the current market day, right? We come into this current daily profile. You're looking at the previous daily profile. This is where the value area is. As long as we are playing inside the value area or playing below the value area low, this is where you would look for your bearish narrative to continue. However, if you get something like this, where the market pretty much just opens, displaces heavily to the upside, leaving behind large, low volume nodes within our value area. This is very specific. Within our value area, this means the market is no longer interested with yesterday's value area, with yesterday's balance range. As a result, Very little transactions were facilitated here, and aggressive buyers were able to dominate with heavy one-sided price action to the upside. Low volume nodes, passive selling supply, they are unable to hold back aggressive buying demand. As a result, we break above this value area high, and now you're looking at these low volume nodes as your next target. When we come into this low volume node, you could see how the market is testing whether the same participants are able to step back in again or not, in the form of this volume point of control, because this means more transactions were being facilitated here. However, if we are able to break above this level, that means these sellers failed out on bringing price lower. As a result, you're going to get that fast movement to the upside, which is exactly what you get over here. And when you're focusing specifically on the value area, volume point of control, shifting higher. Value area is shifting higher. This is an extremely clear bullish narrative right here. We close like this, value area is higher. The next day, large low volume node away. It doesn't have any interest in facilitating further transactions within our balance range, which is this value area low to this value area high over here, right? Very little interest. Aggressive buyers took complete control, took complete dominance, and broke above to the upside. So that is one way you could use the volume profile on the daily profile. And now this is how you can utilize volume profile on your lower time frames and how you could start to look for your entries. Multiple ways you can mark out your dynamic volume profile. For example, if you are trading 9:30 open, New York bell, you can mark the volume profile from the daily's open to 9:30, basically pre-session, electronic trading hours, or extended trading hours, and then you would get your volume profile for pre-session. Another way you could do that, so the first way is based on timing. The second way you could do it is based on price action. So right here, this is the regular trading hours chart. So I'm only seeing price action from 9:30 to 4 p.m. New York time. Currently, this is the price action from 9:30 to 11 a.m. New York time. So we still have basically the rest of the session, including New York PM session, to look for any trades. But this is where you can start to basically draw it based on price action. You want to encapsulate the entire price action over here if we start to balance out, because when you look at it from a price action standpoint, we basically form a really long B, a really long lowercase b. So the way you draw out your dynamic profile, you want to encapsulate not only the expansion, but also the balance range. And this is pretty much like if you only have a balance range, I mean, an imbalanced state of delivery, for example, here, like where it's just one leg higher, you can draw it from the start of the expansion to the end of the expansion, and then you could use these low volume nodes to identify for levels for price to retrace back into before continuing higher. So that is if the market is in a large expansion phase, right? And how that would look is, something like this. Expansion leg, you're looking for low volume nodes for the market to potentially come back into, to reject from. However, high volume nodes should also act as levels of support and resistance, because this is where you get two-sided delivery. Remember, the market is going to slow down when it comes into high volume nodes. But ideally, you want to look for low volume nodes as your rejection zones, because that is where the market offers the fastest rejections, the fastest price action. And that is ideally what you want to be in. You don't want to be in slow moving conditions. But this is the current price action we have. So you could draw it from the start of the expansion to where we start to balance out, right? Considering let's say you come into the market at this time, this is how you would do it. Now, multiple ways to mark out the key levels, but it's the exact same as the daily market profile. Here you have a low volume node. If we were to continue higher, as we fail to find acceptance below here, because we didn't fail to find acceptance, we actually did find acceptance at lower prices because we started to consolidate around here and the volume started to build higher. So this was an accepted range. However, the market isn't going to stay within an acceptance or a balance range forever. Eventually, one side will get more aggressive, and the context here is we found acceptance here. Aggressive sellers, they tried to get more aggressive and break below to continue the downtrend. However, they were quickly absorbed back inside our range, as you can see from the delta profile. Right, the delta is just the difference between aggressive buyers and aggressive sellers. So when you have large aggressive selling in control in the form of negative delta, and they don't get rewarded with lower price action, passive buyers are protecting this level. And that is where you get that responsive buying back inside our range. So already, in terms of framing that narrative, sellers have already lost out previously. And this is where you get that aggressive buying stepping in to attempt and continue price higher to maybe fill in these low volume nodes. So this is how you could start to frame your narrative, frame your targets. This is the balance range. This is the target if aggressive buyers are able to hold control. How can we determine if aggressive buyers are able to hold control? Marking out the value area high, value area low from the specific price action that we have so far. So this is your value area low, and this is your value area high. Like I said, sellers that got more aggressive and broke out of the range low failed to find acceptance. They failed to continue price lower, and they were met with responsive and passive buyers, bringing price back inside our range. Now you're looking for that break and retest off of the value area high to determine buyers and control, and this is going to be your next level. This is going to be your next target. So because this low volume node is a pretty large range, you could refine it to just maybe the 930 open, and then you could use that as your overall target if price even gets there. But like I said, target that, but make sure you trail. So this is what we have. Let's play the price out and see what it does. As you can see, it starts to come back inside our value area high, and these aggressive sellers are not getting rewarded. Aggressive sellers not getting rewarded. Aggressive buyers are starting to step in here, and this is where you can look for the entry. Right, you have selling absorption, and then you have buying initiation over here. However, this isn't really the strongest confirmation, simply because this is still a passive level that is staying protected. As you can clearly see here, we had aggressive buys in the past, and they didn't get rewarded with higher price action. So this becomes a passive protection level where ideally the highest probability trades would be if this level gets taken out. But let's say you enter here. Let's just see how it plays out. As you can see, it hits your stop loss, and that is totally fine. Now, we are back inside the value area, and you are looking to see if sellers are able to keep price back inside our value area. We had one initial attempt to break out already, and it failed. And now it looks like it's going to set up for another attempt. As you can see here, from these aggressive sellers, trying to keep price within our value area, but aggressive buyers are still going strong here. Aggressive buyers are still able to maintain control. As a result, these aggressive sellers, they get absorbed. Buying initiation steps back in. So you could see from these candles alone, there was a lot of indecision. Buyers just managed to take back control before sellers took back complete control. But within these candles, you still had some levels where you had negative delta, some levels with positive delta. There wasn't a clear sign here. This is a much more clearer sign. Large negative delta at the lows, large clear absorption, initiation, absorption again, and then pretty much the secondary candle closes with a full bullish initiation. The majority of these levels were rewarded, and they were dominated by aggressive buyers. So this is where you can look for the entry, stop loss below the absorption, and then you could start, to target all the at this high over here. But the main thing you're looking for is fast movement as we come into the low volume node. Right, so let's see what the market does. Let's see how the market plays out. Right, you see how we're getting that fast movement in comparison to the movement within our balance range. This is low volume. This is inefficient. One-sided delivery occurred here. The market had very little interest. So when it comes back, it's just testing whether the same participants are able to protect this level again or to offer two-sided price delivery. As a result, you're going to get fast movements at these inefficient price levels. And you could clearly see here for yourself. Large aggressive buys clearly in control. You pretty much don't even have a bearish candle. There was no acceptance here in the form that buyers and sellers were consistently fluctuating between a range to facilitate transactions. Here, there was very little transactions facilitated here because aggressive buyers pretty much took back control and they were extremely aggressive with it. And eventually, we come back to 930 open, and that is where you start to get that rejection. And this entire move here, low volume node, fast movement. Matter of fact, even if you draw out, let's say your low volume node over here, or your volume profile from this low to the high, little transactions happened within this leg higher in comparison to this balance range over here, right? Where the most volume was facilitated within this overall leg was at the lows of this. And that is proof to you that low volume nodes, you're going to get fast movements. High volume nodes, you're going to get slower movements, where the market is finding acceptance, where both buyers and sellers are satisfied. And that is the beauty of the volume profile. So if you're not using the volume profile in your trading, then you are just missing out. But I hope you guys found this video helpful. If you did, make sure you like and subscribe. I do offer one-to-one mentoring where we dive deep into everything you need help with. It's lifetime, and you basically work with me one-on-one, right? It's not a normal Discord group where you're in a group with like 100 other people and you don't get a specific support, right? This is fully one-on-one. So if you're interested in that, check the link in the description. Apart from that, take care and I will see you guys in the next video.